This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It is 10 a.m. in London, 5 a.m. in New York and 5 p.m. in Hong Kong. Our top stories today. Nvidia's highly anticipated earnings report is due today after the US market close. The report could validate investor excitement over AI growth. A Bloomberg scoop, tech giant Huawei is reportedly building a secret network of chip factories to skirt US sanctions and boost China's tech ambitions. And Europe's economic downturn intensified in August. Services activity shrank for the first time since the end of last year. Welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie, stepping in for Danny Berger in London with Kriti Gupta in New York. And Kriti, at least in Europe, the sentiment is positive across the equity markets. It seems that bad data at least is being read as good news if you're a stock investor in this part of the world.
There is that element to it. I would argue, there's a little bit of technicals as well. Europeans, close your ears if I can actually dive into this part of the market, which is simply that you have seen pressure on equities lately. Remember, you did have that 5% retracement in the S&P 500, so it's only natural to see a little bit of optimism, a little bit of buying at the margins. But again, Tom, this is a margin that I think is pretty important ahead of those Nvidia earnings. How much of the market is front running what we're going to see in the tech space after the bell? S&P futures higher by 0.5%, 44.23 for our radio audience on those contracts. The bond market seeing some volatility as well, and it really becomes that story of the Nvidia versus Jackson Hole. What is the bigger market move, and which is the bigger market move, the stock market or the bond market? The bond market already getting a little bit jittery. It hit that 5% level on the 2-year yield. You are now seeing a pullback by about 5 basis points, 4.99 on that contract. But take a look at dollar mex. And Tom, I looked at the dollar this morning. I looked at the biggest contributors to the Bloomberg Dollar Index, and one of the biggest kind of weights was the Mexican peso. So the idea of kind of the EM story weighing on the dollar is coming back. The super peso back at it. Dollar mex just shy of that 17 level, down about 0.3% on the greenback. And of course, NYMEX crude, we are watching it heavily as of course we are hitting hurricane season in the States. First it was California, now it's Houston. How much does the gasoline story and the refinery story get impacted by those storms? Down about 0.5% on that commodity.
Isn't it remarkable, Kriti, that we do genuinely have a question about whether Nvidia or J. Powell is more important for these markets this week? A company, arguably, that many would barely have heard about a couple of years ago, certainly would have kept to a niche focus on the gaming space now, and it is a genuine question around these markets. Again, the data was important out of Europe because the services softened, and now there is repricing around expectations for September from the ECB. The markets are fading that expectation that you're going to get another hike from the European Central Bank because of the softness in services. You had the chief European economist for Deutsche Bank saying that maybe the transmission mechanism for the ECB is actually proving more powerful than had been expected. Across the benchmark, when it comes to stocks, though, gains of 0.6% here. You're seeing it felt, the data softness in the euro and, of course, in the sovereign debt as well. Euro-dollar softer by 0.3% around that readjustment. Here in the UK, softer data as well when it comes to manufacturing and services, and that is challenging the pound that we've seen a bit of strength come through. The pound is a little softer, and yields, certainly gilts are bid and yields are coming in, particularly on the 10-year. Look at that, 4.52 on the 10-year here in the UK after the run-up we've seen in yields. Currently yields coming in by about 12 basis points. So there's bid currently for UK debt.
You know, it's interesting, the read-through into the U.S. bond market. Tom, we're talking a lot about Jackson Hole versus Nvidia as the major market move, but it really does feel like the European data is creating a little bit of that volatility in the bond market. Let's get right to it here and bring in Bloomberg's Maria Tadeo joining us for that data. Maria, Tom just talked about this kind of repricing from the ECB, but let's take a step back. What did the data actually show?
Well, talk about a change of sentiment this morning in Europe. You had the PMIs, as you say, which now point to weakness. I mean, the numbers were weak. They add up 2 months now that we've seen of a downturn. And what this suggests now is that this is not just a continued downturn, but it's actually becoming steeper. So this is an economy that is heading for a deceleration. The other point that I want to draw your attention to are the PMIs for both Germany and France. So obviously, the two economies matter a lot in the euro area because this is the biggest and the second biggest economy in the euro area. When you look at the details there, you also see that some of the weakness is not just in manufacturing. We knew that this was in contraction, and it has been for months, but it is also spreading into services. So that is key. It's interesting. And overall, the takeaway from it is, look, the numbers were weak, and you see that reflected in the sentiment today, just how the session flipped this morning.
Maria, how does this change the view, do you think? There has been this very live debate amidst the governing body of the ECB. Does it really move the needle for them?
Yes, and it's going back to this idea of a hard landing, soft landing, and when do you know you've done enough? And is doing too much equally dangerous as doing too little? And we know that's a real debate that goes on at the European Central Bank. Look, when you look at the data today, you already saw the market reaction. Traders per bank bets that there will be a hike in September, and you also alluded to this, a note by Deutsche Bank that says we now see a pause. What is interesting, though, in that note, too, is that they say we're not sure inflation is where the European Central Bank wants it to be. So, again, makes it more difficult for Christine Lagarde to look at this trade-off. But they also say, and I think this is key, that a pause should not be seen as a peak, because remember, she already said it in July, if they hike or hold, that does not set a precedent. They will go meeting for meeting and look at the data.
Certainly a lot to digest, and it kind of feels like this is the same rhetoric we had heard from Jay Powell stateside as well. Bloomberg's Maria Tadeo, we thank you as always for breaking it down. We go from Brussels and London to, of course, the story in the U.S. It's the second day of the Brics summit where President Xi backed the expansion of the bloc and pledged to strengthen the country's ties with South Africa.
I am ready to make a joint effort with President Ramaphosa to take our comprehensive strategic partnership to new heights.
Joining us now is Bloomberg's Jennifer Sabasaja, joining us live from the ground. Jennifer, one of the big conversations has been, of course, the de-dollarization, but what else are they talking about there?
Yeah, I mean, Kriti, you heard a little bit of what Xi Jinping said earlier in the day, talking about the strategic partnership that South Africa and China have, but also talking a lot about how he thinks a number of these countries should be increasing and practicing more multilateralism and boosting the voice of the global South. Now, what really caught a lot of headlines and attention was the fact that the Chinese president actually missed the first opportunity to speak in front of the business forum, instead sending his commerce minister to speak on behalf of him, and he did so in a speech touting the Chinese economy, but also taking thinly veiled swipes at the United States, specifically saying, without saying the United States, but some country obsessed with maintaining its hegemony has gone out of its way to cripple the emerging markets and developing countries, and talking a little bit about how this is the opportunity for the global South to step up. And we have, just leading up to this summit, we were talking a lot about de-dollarization, as you mentioned. That was brought up a bit yesterday, but we're still waiting to see whether or not these countries are going to come up with more of a strategic plan to trade more in local currencies. But at this point in time, there's still a lot of debates that are happening on the ground. Nothing yet substantive has come out of these meetings, but a lot more meetings to happen today and tomorrow.
Jen, that whole diversifying around the US dollar thing, it's pie in the sky, isn't it? I mean, who wants to touch the ruble? China is intervening in its currency, undermining its attempts to institutionalize that currency and get more broader take-up. Really? Is this going to go anywhere?
You know, it depends who you speak to, Tom. I mean, we've spoken to economists. Earlier this week, we talked to Jim O'Neill, who coined the term Brics. He said that that is not going to happen anytime soon. But if you look on the other side of things, earlier today, I was speaking with Indian billionaire and businessman Anil Agarwal, who said that that's already, the de-dollarization is already happening, and he anticipates it's going to keep happening. We heard that echoed from Russian President Vladimir Putin via video conference yesterday. But on the other side, we heard from South Africa's finance minister saying, really trying to tamp down the flames and saying that the dollar's not going to go anywhere anytime soon, but they still need to look for other ways to trade in local currencies and to make some more benefits for these countries individually. Today, at the end of the day, Tom, important to note, we're supposed to get the official declaration of the Brics summit. So potentially we get some language around what these new trade operations could look like. Potentially we get some news on expansion, but we're waiting to hear from the leaders later today.
I mean, it's the tale as old as time, right, Jen? Essentially this idea that if you are looking for the growth story around the world, EM tends to provide that growth, but at what risk? And do you really need the dollar to capitalize on that growth from an investor point of view? Bloomberg's Jennifer Sabasaja reporting live from South Africa. We thank you, as always, for bringing up those updates. Now, to a Bloomberg scoop, Huawei reporting building a secret network of chip factories to skirt U.S. sanctions and boost China's tech ambitions. Tom, this kind of feels like your arena here. You know I've been obsessed with the chip story lately. But look, $30 billion reportedly being given to Huawei from the state of China to really build this network and kind of get ahead of this domestication of the chip supply chain that you are seeing in the U.S. right now.
And look, you stress the 30 billion for good reason, because of course that's about as much as the CHIPS Act provides for all of the chips companies in the US. It's a huge number, if indeed it's accurate. But I remember sitting down with the founder, Ren Zhongfei, of course, of Huawei, just after the US blacklisted that company, and the readjustment at that company was significant. The mobile phones business has been crushed, but they were never going to close their doors and just go away. They were going to readjust. They spent heavily on R&D. I would just note that this is the lower tech part of the semiconductor space, so 28 nanometers and below is probably the kind of fabs that they're building out. But the fact that they are doing this, according to our reporting, secretly to try and evade these sanctions is, of course, significant. And I've been hearing from sources that China is still getting hold of some of those high-end chips. The US obviously wants to make it more difficult. China is going to do everything in its power to kind of close that gap. But at the high end, that gap remains significant.
Yeah, and I think a key point that you made is simply that Huawei, as we know for a global audience, was put on the entity list in Washington back in 2019 by the U.S. Commerce Department. And one of the big concerns here is that this report, by the way, isn't actually coming from the government. It's coming from an industry organization, the Semiconductor Industry Association. Of course, we have reached out to them to see if they can join the program. But this really is a question of waiting and see when you kind of look at what the government is actually going to do about it, if anything, I might add.
Well, yeah, it's going to be a question of whack-a-mole, it seems. Different companies are going to pop up, they're going to put in demands, they're going to put in orders, and for US officials, they're going to have to keep an eye on this if they want to, again, constrain and continue to constrain China's ability to get hold of these chips. That October 2022 order was huge from the US, and we're still seeing the consequences. Coming up later this hour, we're going to catch up with Chris Watling, Longview Economics Chief Market Strategist and CEO. We'll get his views on inflation, central banks, and how to think about this readjustment in the Eurozone. This is Bloomberg.
Well, Nvidia, Jackson Hole, even some of the European data, what is actually driving the markets this week when admittedly it is still knee-deep in summer trading on both sides of the Atlantic and arguably Asia as well. Perhaps that's why you're seeing so much green on the screen. But again, given a lot of these major market moving events, there is one question a lot of people are asking. Are bonds back in vogue? I want to bring your attention to a chart that we are seeing. For our radio audience, stick with me here. Basically, it shows the S&P index's earnings yield minus the treasury yield. It basically shows the difference. And you are already starting to see that earnings yield for the stock market barely above that for the bond market. Now, if you are actively investing in the stock market for that yield right now, as opposed to the long-term growth story, your case is not really going in your favor. And for that reason, the bond market is coming back in vogue. The question is, do those Nvidia earnings change the tune, or do the Jackson Hole comments also change the tune of the market? Bloomberg cross-asset reporter Denitsa Sikova is all over that dynamic. She joins us now on the program. Denitsa, your take.
Yeah, exactly. If you look at all those valuation metrics, which actually have been looking for good for quite some time, now they're really at those extreme levels at like 2-decade high or low, depending on the metric. So if you look at dividend yields, if you look at the equity risk premium, all these equations are pretty much showing that bonds are really more attractive than equities. And we're actually seeing some impact of that calculus on the flows. For 3 months, we saw everyone flocking to equities while flows to fixed income were slowing down. In the last week or so, we've actually seen a bit of a reversal. Equities saw outflows while treasuries were getting some strong inflows. We also saw strong inflows into money market funds, which have been a big theme for some time. And it's a great way for investors to kind of lock those high yields. So we're also, in the option market, we're also seeing less of that bullish sentiment, which was super strong, and people were buying equities and buying co-options at a very strong pace. And of course, this raises the question of what happens next for the Fed and how far can those bond yields rise. Because of course, a lot of that has been on hawkish expectations of the central bank. And unlike Europe, in the US, growth, we haven't seen that many growth scares at the moment, so there is less pressure on the Fed to maybe be less hawkish going forward.
Yeah, I do wonder if there's increased divergence that we're starting to see now between the European and UK economies and the US, where strength in the economy remains. Then it's on the question of Nvidia. You talk about the options market, and of course there's been a lot of activity in the options market around Nvidia. How significant do you expect this to be for the broader market?
Yeah, so this can be a very significant move. If you look at the options market, there is an implied move of 10%. But it's important to say that Nvidia accounts for 3% of the S&P. This is a very significant number. And also Nvidia is like a proxy of that artificial hype, artificial intelligence hype we have seen for quite long. So first, obviously, it's a big part of the index. Second, it's a big part of that hype. So the question is, can more stocks benefit from that? Likely so. Of course, markets are betting, and analysts also see Nvidia beating estimates. But in the opposite scenario, where estimates are actually missed, this can also drag stocks down in the opposite direction. But an interesting trend we're seeing is like for tech stocks, including Nvidia, bond yields have been a big issue. And lately, despite the huge rise in bond yields, we haven't seen that much impact. So we have gone back to fundamentals, and that's where earnings matter a lot. So all eyes are on Nvidia, and a beating estimate will really probably mean good things for the broader index overall.
Yeah, I have to say, I wonder what kind of shock you get for the markets if they miss on earnings and then Jay Powell comes out with a hawkish message on Friday. Denitsa Sekova, thank you very much indeed. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Tom Mackenzie in London. Let's turn to some of the stories we're watching this morning. The SEC will likely finalize its proposal on hedge fund and private equity disclosures at its meeting later today, slated for about 10 a.m. New York time. Bloomberg Intelligence believes that the agency only made minor revisions to its original plan amid intense industry opposition. The proposal could increase compliance costs and exposure to legal liability. Tom, this is an enormous story for Wall Street simply because they're talking about kind of not only tamping down on some of the fees that are associated with some of these PE deals, but also some of the rights, some of the side deals that are also associated with a lot of the ways this functions. And of course, transparency. We know that PE is a hard kind of market to track tick by tick as opposed to the public markets. For example, it looks like the SEC going to crack down on that $17 trillion industry.
Well, that is exactly the point of Gary Gensler at the SEC, of course, is that there is a need for transparency in an industry that, of course, has ballooned over recent years, and that's part of the SEC push. But clearly, the fight back is there. I just wonder what the legal case is and how this transpires in the weeks ahead, but clearly massive for the hedge fund and PE industry. Talking of hedge funds, but with a focus now on the banking side, particularly investment banks, Goldman Sachs and the work from home shift or reshift back to the office. Goldman Sachs is ramping up pressure on its staff to work at its offices 5 days a week. Shock horror. Revenue producing employees are said to have mostly returned full time, but managers have grown frustrated by reluctance from other parts of the workforce. The lender's peers have enforced 3 days a week policies with stricter guidelines for managing directors. Kriti, I don't know about you, but when I first started off, a long time ago, it has to be said, in this industry, I wanted to be in the office. Certainly, I'm in the office now. I want to be in the office now. But starting off in your career, it's really important. So I guess it depends on where it lands in terms of where you are in your career. And also, frankly, if you've gone and spent money on a house outside of town during the pandemic and now face a 1-2 hour commute.
Yeah, I would argue, I mean, from a youth point of view, or if you're an entry-level banking analyst, for example, that absolutely matters. I want to stick with the labor story stateside and talk about union workers at UPS ratifying a $30 billion contract with substantial wage increases covering about 340,000 workers over the span of 5 years. Over 86% of employees voted to approve the deal. That's according to the International Brotherhood of Teamsters, the union's highest vote ever for a contract with UPS. Tom, as we have just mentioned, the labor story continues to accelerate across the U.S., across the world, specifically on what these new contracts should really actually look like. And UPS is so interesting because they've set the bar for so many of the negotiations in Hollywood, in Detroit, even on Wall Street, and really setting the tone, and not just the approach of how you negotiate, but in terms of the read-through and what you should be asking for as well.
Yeah, is this longer term, this dynamic, in terms of more power, more strength for these unions in the US? Many would argue, but it's a long time coming. Or is it going to be short-lived if we get into a slow-growth recessionary era? $175,000 a year was the headline. Of course, the nuances are you have to be a long-term employee of UPS and meet certainly other conditions, but it seems to be significant in terms of the wage uptick for that labour force at least. Coming up, we're going to speak to some of these questions. Inflation, wages with Chris Watling, Longview Economics CEO and Chief Market Strategist. Stay with us for that conversation. It's next. This is Bloomberg.
This is Bloomberg Surveillance, the early edition. Here's what you need to know. Nvidia's highly anticipated earnings report due today after the U.S. market close. The report could validate investor excitement over AI growth. Plus, a Bloomberg scoop, tech giant Huawei is reportedly building a secret network of chip factories to skirt U.S. sanctions and boost China's tech ambitions. And over in Europe, the economic downturn intensified. In August, services activity shrank for the first time since the end of last year. I'm Kriti Gupta in New York with Tom Mackenzie in London, stepping in for Danny Berger. Tom, we're kind of talking about this juxtaposition between Nvidia and Jackson Hole, and then enter the European economic data. Walk us through it.
Yeah, are we seeing a clearer split now between the economic fortunes of the Eurozone and the UK as well, and the US, where, of course, you're still seeing relative resilience because the data was softer across the Eurozone, predominantly and most importantly for the two largest economies of Germany and France, and services. And there was that really interesting note coming through from the chief economist of Deutsche Bank saying that the impact of those rate hikes coming through from the ECB on the services sector may be more pronounced than the hawks have suggested, and they are now pricing in a pause from the European Central Bank. As a result, you're seeing euro down. The UK data was weak as well, so the pound is softer and money is moving into sovereign debt. But let's just remind you of what's happening in the equity space, because despite that softer economic outlook, there is good news, at least if you're an investor in stocks in the Eurozone. Gains of 0.6% may be pricing in as well and starting to think about a less hawkish set of central banks with the Eurozone. Euro dollar 108, a move low in the single currency by 0.3%. And the money moving into UK debt. Gilts on the 10-year, the yields are down 11 basis points. 453, again, as markets readjust to how much more the Bank of England has to do in the face of what looks like a softening economy.
Well, I mean, in the absence of any clear driver in the States, it does feel like the bond market and I would argue the equity market as well, taking their cue from what you just outlined in Europe, specifically when it comes to the bond market. We'll come back to stocks in a second, but the two-year yield hovering at about 5%, already down by 4 basis points. That is a key technical level. Markets love a round number. So how much of that is going to change when we do actually get those Nvidia earnings after the bell? Do you start to see more emphasis hopping into the market, or perhaps a little bit of caution going into Jackson Hole as well, and specifically the comments we're expected to hear from Chairman Powell, which brings us to what we're seeing in the equity market. Again, perhaps a little bit of front running when it comes to the market. Nvidia is the biggest volume mover in the pre-market this morning, and actually I would imagine that optimism around those earnings pushing a little bit of the sentiment into futures right now, higher by 0.5% stateside, 44.21 on those contracts for our radio audience. Let's bring it back to the FX story though, because the one place you are not seeing green on the screen is in the Bloomberg dollar. The super peso added again its biggest weight on the dollar at the moment. Dollar Mex trading about 16.86, weaker on the greenback by about 0.3%. If you're worried about trading inflation, specifically food inflation, the Mexican peso seems to be the vehicle in which to do it. And of course, we're always going to get a check on commodities because, Tom, a renewed interest on the storms that are hitting not just California, but Houston as well, and what that means for gasoline production, refinery production in the States. NYMEX crude trading below a 79 handle, down almost 1% on the day.
OK, let's bring in Chris Watling now, Longview Economics CEO and Chief Market Strategist. Chris, we were talking about the data coming out of the Eurozone and the UK. Do you now see two economies, the Eurozone and the US, on very different paths? And how does that inform your view on central banks?
Yeah, I mean, it's an interesting point. I mean, it looks like this data, Eurozone, seems to be rolling over into a proper recession. I mean, sub 50 on services is quite meaningful, and it's broadened across the Eurozone economies with themselves, the countries within the Eurozone. So I think there's a lot of challenges there. The US has had a bit of resilience, but frankly, I don't buy it. I mean, I think recession is coming to the States. And let's throw in China. I mean, China's got so many challenges at the moment with what's going on with its housing market and with the fact that policymakers don't seem to want to respond. They seem to be stuck with like a rabbit in the headlights as to whether to respond or not. Do they want to deleverage, or do they want to support the economy and fight the deflation? So it's a tough old global economy.
And China's another drag on the Eurozone, of course. When you think about the ECB then, do you buy into the market view now? They're pricing out a rate hike in September. Does that seem rational? And if they stop and pause, does that mean we've reached a peak with the European Central Bank?
Yeah, I think so. And I think this is a theme that's been brewing for a couple of months now, that we're getting towards the end of rate hikes. And this kind of data adds to conviction that we're really not too far away at all, if not there already. So, yeah, I think the market's got overly hawkish on the hikes it was pricing in the last couple of months, and we'll start to see them come out now. I mean, this data is terrible. I mean, it comes down to what you think about inflation. Do you think there's a wage price spiral, or do you think it's a couple of shocks that are going to dissipate because money's now getting tight and money supply is contracting? Frankly, we're of the latter. So, yeah, I think, inflation goes fast. We're seeing that in the US. That'll turn up in Europe and the UK. And rate hikes can be taken out the curve, yeah.
I want to come back to the wage price spiral in a question in a second, excuse me. But you write in your notes a really beautifully worded kind of question that I don't think I can reword in any way, which is, will China's deflation be exported to the West, or will the West export inflation to China? I never really thought of it as a two-way street, Chris. Expand on that.
Well, I mean, there's a very good correlation if you look at Chinese PPI and US core CPI with a lag. You know, what happens in China gets made in China, gets exported in many ways into the States. So with a time delay, of course. So there's clearly a correlation. I mean, China's the manufacturer of the world. I mean, not everything's about manufacturing, but a lot of manufacturing will drive energy prices. Once you add in oil into that inflation equation, and once you take out shelter, you're starting to get to a lot of what's going on. So, yeah, I think that's a really key connection. Global inflation trends tend to correlate, and what starts in China tends to end up in the West. So it's interesting. It's a very sort of juxtaposed, contrarian position we see at the moment, with China in deflation now, and the US with still high-ish inflation, but it looks like it's easing pretty fast.
Well, Chris, let's come back to the wage story then, because I think it does actually all connect. If you were looking at those higher PPI numbers coming from China and other exporting countries to the U.S., that's going to filter into the end consumer price that a lot of corporate America is charging, which then is going to filter into some of the negotiations that the labor market is having with the likes of the workers in Hollywood and in Detroit and Silicon Valley. How worried should we be about pricing those labor negotiations?
Well, I mean, the IMF did a terrific study of wage price spirals not that long ago, a few months ago, looking at all the examples they could find across the developed world and wider afield over the last sort of 4 or 5 decades. And the reality is, when you really boil it down in the States, there's probably only one example, and that's the 1970s. And the reason that happened, you ended up with a wage price spiral, in my opinion, is because money supply growth continued throughout the entire decade at high levels. In other words, there was so much money around, it enabled those high prices on consumer price goods to feed into wage inflation and create that wage price spiral. So I would say, just like it says in the IMF piece, the odd wage negotiation that you refer to, yes, they're going to happen, but don't worry about it. It's not the main story here. The main story is money supply is contracting. That's what you need to look at, and that's where Friedman was right in the 1960s. And frankly, yeah, as I said, there's only been one decent example of a wage price spiral in the last, 100 years, let's call it. So, yeah, I think that's the trick here. That's what you need to focus on.
Where does that take you to your view on bonds then? So yields across US Treasuries are coming in after the run-up that we've seen. Was the sell-off in US Treasuries, was it overdone? Do you buy the dip?
Yeah, I think you do buy the dip. I think it was overdone. There's all these theories about why bond yields are going up. You know, the Chinese are defending their currency and selling treasuries. The Japanese are doing the same. And
big issuance.
Issuance, there's so many theories, and the issuance is the one that troubles me the most, perhaps along with the idea that we've taken off 15 years of financial repression. But when you really stand back from it all, what do bonds do? You know, they really price where the economy's going, and where inflation's going, where growth's going, and none of those look good to me. So I think this is an attractive entry level for bonds.
Chris, there was a call out of Bank of America last week, which basically said, are we in a 5% world? And is the higher for longer essentially the new normal? Not just the new normal right now, but the new normal for decades to come. Your take?
Well, I mean, it reminds me of when we had $200 oil calls out in during the Ukraine invasion of Russia last year. I mean, generally the market seems to the narrative gets carried away at the top. And no disrespect to Bank of America, I'm sure they're terrific folks, but you know, that strikes me as the narrative getting carried away at the top. I mean, if you look over 200 years of where interest rates should be, I'd say 2 to 4% is the range, and that's where you'd actually put sort of your average 10-year bond yields as well, pretty much maybe with a bit of a premium in there to reflect normal sort of upward sloping curves. So, yeah, I think 5 is not the new norm. I think 5 is where we are at the moment. And I think I wouldn't be surprised if we're at 3 in 12 months' time, frankly.
Chris, before we let you go, the most pronounced action in the bond markets right now is in gilts, and yields are coming in quite significantly, 12 basis points on the front end and at the 10-year here in the UK. Is the UK already in recession? Has the BOE done enough?
I think they've done more than enough. I mean, it's working its way through the system. I mean, the data this morning was poor in the UK. I think it seems pretty convincing. I think the great trade out there is sell the pound. The pound is over-owned, overcooked, and it topped out on very strong inflation data not many weeks ago, which suggests to you all that bad news is in the price, if you like. Everyone's in, and it needs to go the other way.
Certainly something we're going to be watching very, very closely. Chris Watling over at Longview Economics, thank you as always for joining the program this morning. Coming up, we go from the macro to the micro. Markets awaiting earnings results from Nvidia reporting after the market close. Shares higher by 1.7% already. More on that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London with Kriti Gupta in New York. Nvidia. Kriti's been highlighting this for us, reporting, of course, today after the US market closed, the options market bracing for a large share price gain that will test the staying power of the AI boom. Shares edging higher in the pre-market. Alex Webb of Bloomberg News and Matt Bloxham of Bloomberg Intelligence joins us. Alex, just set out for us why this is so significant in terms of our broader view on AI.
So Nvidia, at least from an equity perspective, is the thing that has really driven the boom. We had, of course, ChatGPT. Then when it came to the end of the March quarter, they forecast the quarter we're in right now, and it was more than 50% higher than analysts had been expected. They telegraphed revenue of $11 billion. Now, the analyst expectations are now for ever so slightly more than that, $11.04 billion, more or less in line. The concentration now is what are they going to forecast for the upcoming quarter? What's going to be, the quarter that ends at the end of October? They're predicting $12.5 billion. That will give us a sense of the staying power of this AI boom.
OK, so Alex is looking at the forecast. Matt, what are you and the team at Bloomberg Intelligence going to be zeroing in on when it comes to AI, when it comes to Nvidia's earnings and the broader read across?
Yeah, well, I think it really is this kind of AI-fueled demand boost. That's really helping their data center business, which is, potentially in that 12.5 billion for the forward quarter, going to more than double year on year. So it's got kind of an acceleration in growth there. And I guess what we're seeing is all these end markets. Everybody is scrambling to create their own version of a GPT generative tool or tools. Across every industry, so there's a huge amount of pent-up demand. I guess one of the big questions is to what extent is the supply chain allowing them to meet that demand? So that might be the only one thing that might temper the optimism they put out there in terms of the growth rate.
Matt, let's go there specifically. When we're talking about where Nvidia actually has their most growth, of course, we know the stock market has been capitalizing on the AI space, but talk to us a little bit about the gaming piece of their business. It's fairly new relative to kind of where their expertise is. How does that factor into today's numbers?
Well, I mean, I guess gaming is where people really kind of know Nvidia from historically, and where a lot of their kind of graphics processing fame comes from. So it's a substantial part of the business, but out the spotlight right now, I think there are some issues there about inventory and a slowdown in China. So perhaps that, together with autos, one of their newer segments, where again EV demand, electric vehicle demand in China is perhaps a bit softer than expected. Those two, maybe not going to be growing that well in this quarter. And I think really the focus is going to be on AI and how much demand there is coming through there and whether they can meet that demand given what's going on in the supply chain.
I mean, it's certainly something that the market is going to be testing and arguably has already front run. I mean, I'd be surprised to see an additional gain off the back of these numbers, given the run up in the expectations here. Alex, dive in for us and talk to us a little bit about the ARM situation. We know that Nvidia is reported to be one of the anchor investors for the ARM IPO. How does that help their business case?
Well, they've been reported to have been in talks to become an anchor investor in the ARM IPO, along with the sort of laundry list of big semiconductor and technology players, including Qualcomm, Apple, Intel, and others. The thing is with ARM is that they provide some core technology which is used in Nvidia's CPUs, and that is the case with a lot of different chip makers, chip designers. They therefore want to ensure, presumably, that ARM remains independent, that no one player is able to lean in too much, which frankly was the concern about Nvidia acquiring ARM. If you remember, SoftBank had agreed a deal to sell ARM to Nvidia. That fell through because there was a lot of concern that Nvidia would control too much of the chip-making supply chain. One footnote to that, of course, is that a lot of the deal was going to be denominated in Nvidia stock. That stock today would likely be worth in the order of $70 billion. The list price that is being targeted is in between 60 and 70 billion. So perhaps a certain amount of regret at SoftBank that they didn't manage to get that across the line.
Alex, I want to get your views on Huawei as well, and this scoop that we got around them building out foundries in a kind of secret attempt to avert and avoid some of these US sanctions. How significant do you think that is, and what does it tell us about, more broadly, China's attempts to kind of close the gap on the US?
Well, we know that China imports in excess of $200 billion worth of semiconductors a year, and they have intentions of getting, I think, more than 70% domestically manufactured by 2025. The key thing is that they do have chip-making capabilities of their own, but they tend to be less sophisticated. It isn't the stuff that Nvidia does on the bleeding edge of AI-appropriate chips. That's what they're trying to get into. There have been huge sanctions placed on, not least, sort of Huawei, making it harder to sell chips, and of course the chip-making equipment to those guys. Therefore, it looks like they're setting up these other factories to get around some of that. I think probably the most significant part is the rest of the world now seems to be aware, not just because of the Bloomberg story, but because it comes from a chip-making association, which means then that there is possibility that these measures get expanded to incorporate these other factories.
Matt, your views on this story, and we know they spend very heavily, Huawei, on R&D, but to Alex's point, the gap is still large. It's likely to be the less sophisticated end, maybe, of the chip ecosystem. Do you have a broader takeaway on what the read-across is for China, and indeed some of the telecoms that you cover as well?
Yeah, I mean, I think we've had some $30 billion of government support going to Huawei for these facilities. I mean, it's no surprise Huawei's been talking about its own silicon for several years now. I think if anything, the US sanctions just accelerate their desire and their need to develop their own capability. So, I'm not really surprised to see this at all. I guess there's going to be longer term questions about, I think, over maybe the midterm, these kind of neutral markets, for example, maybe something like India, which is a huge smartphone market, that could create much more rivalry for the kind of historically US-driven chips in smartphone from a Chinese rival in the midterm. So I think there's kind of a midterm issue there about how the semiconductor industry is going to share between different players.
I'd argue geopolitics really factors into that as well, just given that we do have, of course, the Taiwan presidential election coming up, and a lot of the heavyweights in the chip industry will have an impact on that as well. Alex Webb and Matt Bloxham walking us through the Nvidia story. We thank you as always. Let's get some breaking news, though, because we are seeing some major market moves, specifically in Europe. The benchmark gas metric falling as much as 18%. Now, of course, we know it's been gaining quite a bit in the last few weeks, coming off of the strikes in Australia when it comes to those facilities. It looks like Woodside Energy, one of the main players in that space, says that there has been no update yet on those LNG strike talks. But the reason you're seeing such of a pullback is because you're also seeing a lot of the LNG capacity kind of drop when it comes to storing some of that. There's been such an increase in buying because of the worry of supply. Now it feels like there's a sentiment that, well, maybe we might not actually need that production. So you are seeing a little bit of a retracement in those natural gas prices, down about, well, as much as 18%, but now about 10%. We're going to bring you all the live updates as we get them. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London with Kriti Gupta in New York. Let's take a look at what is ahead today. US PMI coming at 9:45 a.m. Eastern Time, followed by new home sales at 10 a.m. plus US consumer confidence data out at 10 a.m. Eastern Time, as the US consumer starting to feel a little bit more cautious. Then, of course, the big one, we get Nvidia earnings after the US market close. So much focus on that company. And the first Republican presidential debate will be held in Milwaukee later in the day. Former President Donald Trump is not expected to appear. Kriti, there's a few things on the docket. It's going to be an interesting day.
Of course, it will be, and we're going to have full coverage for you on Bloomberg Television, Bloomberg Radio, and of course on the Bloomberg Terminal. Tomorrow morning is going to be really interesting to see how America really went to bed at night, Tom. But it's also going to be interesting in terms of some of the stocks we're watching now that we're going to get results for throughout the day. Let's start in the tech space. Microsoft specifically, we know that they're pushing to get that deal done with the CMA on their $69 billion acquisition of Activision. The shares both higher for Microsoft and Activision. Microsoft higher by about 0.8%. Activision higher by only 0.1%. What's interesting is that it's still shy of its $95 offer price. So again, perhaps some questions about the regulatory scrutiny, but look, they're offering up a licensing agreement. The CMA has traditionally said they're not really that interested in licensing agreements, and then kind of changed their tune. So we'll see if that is certainly something we're going to watch. Nvidia is another one, Tom, of course, as we watch that one very, very closely. Those shares higher as well this morning by a really interesting margin, 1.6% higher. And you're seeing a little bit of that sentiment slip into Intel and AMD as well, both higher by about 0.7%. So already a lot of good news baked into the market. Let's talk about Nike, though, as well. We've done a lot on tech. Let's shake it up here, because you are seeing green on the screen there as well. Nike shares higher by 0.1%. But the real outperformer this morning coming from Foot Locker, higher by 5.5%. Now, Tom, Nike has had a 9-day losing streak. A lot of that coming from China, the consumption there, and of course the inventory story. And Foot Locker might be able to kind of say what those Nike earnings might look like in a couple of weeks. They're reporting in the pre-market this morning.
Well, it's a record, isn't it, for Nike, that string of downturn days for that company. And the China component is really, really interesting. You've got to feel for some of these companies. They wrestled through the pandemic. They had to deal with the supply chain issues, the input costs, the inflationary impacts, then drawing down their inventories. And now, of course, for a company like Nike with big exposure to China and a big bet on growth coming through there, that obviously being questioned by the tumult in that economy.
Yeah, I'm waiting to see about the supply chain story, though, because one of my favorite kind of fun facts from the pandemic and those supply chain crunches was that Nike Air Jordans used to take, or they do take, about 40 days to come from Asia to the U.S. They used to take 80 during the pandemic, so something we'll be watching very, very closely. That does it for the early edition. Surveillance is ahead. It's the countdown to Jackson Hole. Stick with us. This is Bloomberg.